Hi, it's Peter Schiff. This is Friday, July 17th, 2009. First of all, let me thank everybody who went to my website, schiffforsenate.com, and who donated to my exploratory committee. I think last I checked, which was earlier this morning, there's about 1,500 people or so who had donated. That might sound like a lot of people until you think about how many people are actually watching this video. I think this morning I checked, about 13,000 people had watched the video on my YouTube channel. I know that my video blogs get picked up by at least a half a dozen other YouTube channels, so I'm sure total views are probably 20, 30,000 over the last couple of days, and so fewer than 5% of you have actually donated to the campaign. And I'm sure that the vast majority of the people who regularly watch these video blogs probably support what I'm saying. They'd love to see me run, and they'd love to see me in the Senate. And if that's what you want, you got to make the sacrifice and make the donation. I mean, you can't just assume that somebody else is going to do it. And I think that's a natural tendency is to say, well, what difference is my contribution going to make? Other people are going to contribute. We can't think that way. We have to know that we're the other people, that every contribution counts, and don't depend on somebody else to make the contribution. Everybody's got to sacrifice something. Remember, I'm making the greatest sacrifice at all. Running is a sacrifice. Serving 6 years is an even bigger sacrifice. All you need to sacrifice is a donation. So if you haven't donated yet, when this video is over, you want to see me run for the U.S. Senate, you want to see me beat Chris Dodd, you want to see me beat the rest of the big government Republicans that are going to try to take the Republican nomination, then go to schiffforsenate.com and make a contribution. Anyway, let's talk a little bit about the markets. I was talking a week or two ago about a head and shoulders top that looked like it was forming in the stock market, and we had broken below that neckline about a week ago, and it looked like we could have a more dramatic drop in the Dow down to about 7,500. Well, what happened is that pattern, at least temporarily, has been put on hold because the market has rallied back through that neckline, and we're approaching the area of the head. Now, if the Dow actually closes above 8,800, we would actually completely fail the head and shoulders pattern. It would be a broken head and shoulders, which potentially could portend a very substantial rise, which shows you how difficult it is to play short-term market swings. But we don't know. I mean, we could still be forming a second shoulder, another right shoulder in the head and shoulders top. But it's hard to tell. But I wouldn't be surprised to see the market have a bigger rally here. The dollar, of course, has continued to be weak, and the dollar index closed below 80 this week, around 79.50. I think either way, whether the market rallies or falls, I think the dollar's going down. And I think it's going to go down pretty big. Commodities rose over the last week or so with the stock market. There are a lot of people that want to read a positive economic indicators out of a rising stock market. The reason I got my necktie on today, my jacket, as soon as I finished recording this, I'm heading over to do CNBC, to do Kudlow, and I'm sure all the people over there are going to be using the stock market strength as some significant indicator that the recovery is here. We are in a long-term bear market. This rally notwithstanding, we're going to be in a bear market, I think, in this country for many, many more years. And regardless of what the stock market does in the short run, it doesn't mean anything for the underlying strength of the economy, the health of our economy. If you really want to know what's going on in the economy, look at what's happening. Look at the impending bankruptcy of CIT, one of the major lenders through the retail supply chain. They deal with a lot of clothing companies, a lot of shoe companies. They factor a lot of sales transactions. Why are they bankrupt? They're bankrupt because the merchants aren't selling the goods. Americans can't afford to pay for the goods. Either they bought on credit or they're just not shopping as much, which is all part of the market correction, getting away from this consumer-based economy. But we've got a long way to go in this process. There are a lot more CIT bankruptcies yet to come. There's a lot more unemployment to come. And unfortunately, with what the government is doing, there's going to be few new jobs created, fewer new businesses created to employ all these people that are going to be losing their jobs. Hopefully, the government does not bail out CIT. I know they've gone to the government and asked for a bailout. That's part of the whole moral hazard. Let's hope that the government, at least in CIT's situation, decides not to go for a bailout. if you really want to look at some of the economic news that's out there, you look at some of the reports that came out this week. Intel came out with earnings, and they reported a 20% gain in sales in China and a rather substantial decline in sales here in the United States. You had a similar story from Hyundai. Hyundai had sales drop by 10% in the United States, but they surged by over 50% in China. Meanwhile, China also came out with good GDP numbers this week. I think their economy was growing at just under 8%, stronger than had been anticipated. And what I've been saying is that, as Americans stop consuming, our purchasing power is going to transfer abroad. And so we're consuming less. The Chinese are consuming more. Instead of exporting all of their production, they're consuming more of their production themselves. And other countries are taking some of the exports that used to go to the United States, and now those exports are going to China. And this is just the beginning. Imagine what's going to happen when the Chinese abandon their currency peg and let the RMB go up. Because as the RMB rises and the dollar falls, this dynamic is going to accelerate. And that's going to create tremendous purchasing power in places like China. And so if you want to be invested, you need to understand this dynamic, and you need to be investing in countries that are going to really have substantial economic growth. Unfortunately, the United States, real growth is many, many years away, because it's not going to happen until we allow this recession to run its course. And if we get things like this healthcare bill that I wrote about in my commentary today, and I mentioned it a couple of weeks ago, things like cap and trade, our economy is drowning. And instead of the government throwing it a life preserver, they're throwing it an anvil. And we're just going to sink to the bottom. So if you're going to look for any evidence of strength, it's not our stock market. The stock market is just going up. It doesn't necessarily mean anything. Look at how many false economic signals you get out of the rising stock market. And one of the reasons that the stock market is probably going up because the bond market's going down. People are getting out of bonds, and people are realizing that cash is not the place to be because the government is printing so much of it, and they're going to have to print so much of it. Talking about the printing of money, I was watching the testimony of Henry Paulson. I don't know how many people saw that on. I was watching it on CNBC, but he was testifying before the House, and they're grilling him on what happened with he and Ben Bernanke and Ken Lay with respect to Bank of America's buyout of Merrill Lynch. And the one thing that seems obvious, you still had Henry Paulson unbelievably claiming not to remember key parts of his phone conversations. I don't see how these things could not be memorable. But the one thing that he even admits and acknowledges is that he did pressure Ken Lay into doing this deal. There's no doubt about it. And I'm sure the way it went down is Ken Lay saw these losses at Merrill Lynch, said, "Oh my, this is terrible. I can't do this deal." And Ben Bernanke or Henry Paulson said, "Look, Ken, you got to do this deal. And if you don't do this deal, and Bank of America needs government aid at some time, then you're fired because we're going to make the bailout contingent on you losing your job. But if you go along with this deal, even though you know it's not in the best interest of your shareholders, then if your company is in trouble and you need a government bailout, you can keep your job." Now, I don't know why that's legal. I don't know why any country would accept that. Any free country would say that you can have the Secretary of the Treasury basically blackmailing or bribing, any way you want to look at it, the CEO of Bank of America. Because basically, he was making that deal in his own self-interest. He was making a deal with Henry Paulson to save his job, even though it was not in the best interest of the shareholders who he was hired to represent. How can this be legal? How can Henry Paulson not be under indictment right now? And if Ben Bernanke was in on this, how can he not be under indictment? If these leaders are allowed to get away with this type of behavior, it's carte blanche now on Capitol Hill. They know they can do whatever they want because nothing is going to happen to them. As long as they say it's in the national interest, then the ends justify, or the means justifies the ends. Not in my book. Anyway, that's it for today.